Available inventory of single-family homes on the market is rising quickly each week now. What does that mean? Is it a sign that the market is turning? Should we be worried? These are real signals and legitimate questions. So let's take a look at the data. Each week, Altos Research tracks every home for sale in the country. We analyze all the pricing and supply and demand and the changes in that data, and we make it available to you before you see it in the traditional channels. I'm Mike Simonsen. I'm the CEO of Altos Research, and here's what we're looking at for the week of May 9th, 2022. Inventory climbed 4.5% this week. That's a big change. Inventory is climbing much faster than last year at this time. In fact, at this pace, looks like by next week we will post the first year-over-year inventory gains. We have 305,000 single-family homes unsold available on the market right now, with 80,000 or so getting listed, another 80,000 going into contract. We read that as less than 4 weeks of inventory. As this market takes its foot off the gas, though, it's still racing down the freeway. We have a long way to go to get us back to normal speed, but these are the early stages of that change starting. Meanwhile, home prices are up to a new record this week. The median price of a single-family home in the U.S. is now $432,000. Prices will they'll likely reach their seasonal peak in the next couple of weeks at about $440,000. Most years, the price of the active market peaks at the end of May. Deals get done in June and July, and the traditional headlines reporting those transaction prices, they'll still be reporting this strength in August, September, October. It'll be a fun time in the data in the next few months as the real-time view shows the market starting to slow a tiny bit, but many of the headlines are still going to report massive new price records in the coming months. So here's hoping that the people making the interest rate policy decisions know which of the numbers to watch to determine if rate hikes are actually having the desired effect. To be clear, we can measure slightly slowing market in the available inventory numbers right now, but there are no signs in the pricing changes slowing yet. Because it's May, it would actually be very unusual to see signs of price slowing yet. The last few weeks of May are very reliable price gains each week, and then that's proving true again this year. So we're at 10% year-over-year price gains right now, and that looks likely to hold for the year, even as inventory climbs. The median price of newly listed properties is also staying strong each week. That's the light red line here. You can see at the far right end of the chart, the new listings prices haven't plateaued yet. The price of new listings rose this week to $429,000. Normally by this time of year, the new listings prices have plateaued. The light red line here usually peels away from the dark red line in this early seasonal summer plateau. This shows us that rising rates have not yet scared off enough buyers to really have any weakness in pricing out there. Plenty of bidding wars still going on ultra tight supply. So that's still the rule, even as we get a few more homes available on the market. Remember, we still have fewer than half the number of homes available right now than we did just 2 years ago at this time. We're still very much in crisis mode. Every bit of increased inventory is a welcome sign of a slight return to normalcy. The immediate sales tracker this week, we can also see the slight cooling. 28,000 of the 105,000 or so new listings went into contract immediately this week. Over the last 6 weeks, immediate sales have slid from 33% of the new listings down to 27%. A third of all the listings were going into contract essentially immediately, and now it's only 27% of those. It's a subtle change, and it can be difficult to detect at the local level, but at the national level, we can see just slightly intense bidding happening. Last year at this time, we had slightly less inventory hitting the market and slightly more of them going into contract immediately. So that's why we have inventory building right now relative to last year. The low point for immediate sales last year was the 4th of July week, not surprising on the holiday. But then demand picked up in the second half of the year, that surprised me at the time. I don't expect that to happen this year. We're going to watch for the light red portion of this bar to shrink as a percentage of the total from here on out. Assuming that happens, this would imply fewer bidding wars and like a slight return to sanity in the market in the second half of the year. As a result of these changes, we are adjusting our inventory projection up a little bit. We've had several weeks of bigger than expected inventory gains. Like we can see the impact of rising rates in a cooling market. We're already up 22% from the low point in March. 22% more listings available right now than the low point just a few weeks ago. But now it looks like it could be next week when we cross over to year-over-year inventory gains. For the first time, each line here is the available inventory curve for the given year. The dotted line is how we might expect the rest of 2022 to play out. You can see that inventory is rising quickly now, and that we expect it to stay elevated later in the year. The curve for 2022 is echoing the curve for 2018, the last time we had rising mortgage rates. So hopefully in the end of the year with around 400,000 single-family homes available. The current projection is a little lower than that, but can continue to be revised upward as new data comes in. If you have questions on this data and want to dive in more deeply, this week on Thursday, we have our hour-long webinar. This is where we spend time with all the signals, all the leading indicators. We look at a lot of the local markets as well. We explore how to work with buyers and sellers right now. The market's changing so fast, and people really need to get the data to help them make decisions. So join us for that webinar on Thursday. We actually have almost 1,000 people registered already, and the attendance is capped at 1,000. So register now if you want to join and see the full set of data. There's a link in the description below. Okay, that's all the data we have time for today. As always, go to altosresearch.com to get your data and a free consult with our team. The webinar is this Thursday at 10 a.m. Pacific. Link to register in the description below. Click that, join us. See you soon.